the issue with the housing market is supply and demand. We have demand for housing which outstrips the supply of housing, and it's occurring both in housing prices and rents. There's more demand for rental properties than there are rental properties available. And I think this is where it gets a little bit complicated, because it's true that on the one hand, investors buy houses, but then they rent them out to people. So in Australia, the rental stock, and this is a bit unusual, well, it's not unusual, but many countries don't have this. In Australia, the rental stock is effectively owned by other households, investors. And so you've got a situation where people want to rent. They've got to rent from someone, they rent from investors. The question is, if there were less investors, might there be more houses that people could buy? You'd still have a need for renting. So who's going to provide the rental stock? So it's a complicated situation. I would say that at the moment, what we're observing with investors is typically what we observe in these cycles, that investors are the first ones to pick up.
You don't accept you played any role whatsoever in the housing price spike of the last 5 years? Is that your...
The housing, as I said, what happens with monetary policy as part of the transmission mechanism is through the housing market. We know that. But again, the problem is the lack of supply relative to demand. And when monetary policy eases and housing demand picks up, supply can't pick up as quickly, and that's where you end up. But it's not monetary policy's responsibility to look after housing prices.